the last 7 weeks, I have not put a single dollar into my $30 per week portfolio. Not one. When you're following a strict and really consistent investing habit, stopping starts to feel like you're failing, especially when you're on a low budget. But I did it, and after doing the math, I realized it might be the smartest financial move I've ever made. So in this video, I'm gonna show you guys the math behind why I decided to prioritize debt over investing and how to know when you should do the same. Sometimes life happens. For me, life was a 5-figure balance on multiple credit cards while having to pay hundreds of dollars every single month on the interest alone. And despite all the internet advice in the world, I was doing absolutely nothing about it. It wasn't until I started looking at the math where I finally got a reality check. So historically, my portfolio goes up about 13% year over year to get to where it is today. And last year was actually a bit of a fluke. It went up twice as much. But when it comes to my credit cards, my debt is an average of about 25%, which according to Forbes.com is about the nation's average. Not only is the interest on my average credit cards higher than my average year over year growth in my portfolio, but 13% per year, let alone 26%, is not promised at all. But that interest rate, the same interest rate I called multiple banks about to try to get it lowered, and they said no, is going to be what it is. I realized that investing $30 per week into a portfolio to try to financially better myself while paying over 20% in interest alone on the credit card debt was like filling water in a bucket with a hole, and the hole just gets bigger. It was ironic, and it was literally working against my goals. That ultimately made me realize that focusing on debt doesn't make you a quitter. It just makes you more of a rational thinker. I didn't immediately stop investing at first because my biggest fear is that my portfolio will stop growing. But it's been over a month, and since then my portfolio has grown 1%. Not a lot, but still growth. As a matter of fact, that includes a 2.5% growth over the previous week. So who knows what will happen next. But what still frustrates me, and it might frustrate me for a little while, is knowing that I missed out on a lot of moments where the market dropped and my positions went on discounts and I missed out on a lot of growth. But my portfolio is still not failing. Turns out market momentum actually cares a little bit more about what you've made in your portfolio as opposed to what you're consistently adding to it. And to add on to that, before I started investing, I actually sold over $3,700 worth of stocks and ETFs I had been holding onto for years. And I ended up leaving what I have been calling my Core 8 portfolio. But to really understand why I pulled that money out and why I stopped my weekly contributions, let's look at the math. So you have two of my credit cards, one sitting at 22.5%, the other at 28.5% interest, so about a 25.5% average. In the stock market, I am chasing an average of 13% growth, potentially, keyword, potentially. That return is super speculative. My portfolio could go up one day and go down the next 5 or 6 days. The interest on those credit cards, that's guaranteed. Every $100 I was putting towards credit cards was actually costing me extra $25 because I was paying the bank the privilege to continue to have debt with them. You see how goofy that sounds? Pulling that $3,700 out of my portfolio not only helped me pay off that high interest debt, but it's literally promising me a 25% return because I'm avoiding that interest. So once that high interest was gone, I took that $30 I was putting into my portfolio and redirected it to my savings account where I was already putting in about $40 every single week. Now at this point, I'm not just saving, I'm literally creating a debt-killing fund. My goal is very clear. I'm going to continue saving and taking advantage of this high interest savings account until I have enough to pay off the $7,800 remaining credit card balance, which based on my current balance, how much I'm saving and how much I'm paying towards my credit card right now automatically, I would have enough by September, so in a couple months. But because that balance is at 0% until May of next year, I have the luxury of waiting until then, but the goal is at least to have enough to pay it off by September. I'm essentially buying my financial freedom on a timeline, so pretty cool. When I stopped investing, I wasn't giving up on the market. I was making sure that every dollar that I put into something was making me more money and not just covering the interest that I had to pay. So by at least September, that almost $8,000 balance is gone. And the second it is, I have a freedom to take that $30 or that entire debt killing fund and put it right back into my portfolio and catch up on that growth if I actually wanted to. So assuming I do that, if you're wondering what I plan on putting my money into, make sure you check out this video so you can see the strategy that I have to make sure that every dollar I invest as a low budget investor goes into the right positions to make me as much money as possible in the long term. So I appreciate you guys watching this video, and until next time, take care.